Good evening. I'm Jerry Garson, one of the officers of the Montgomery County Civic Federation, Inc., hosting a meeting on real property tax assessments in Montgomery County. The meeting will be led by Ava McIntyre-Garvey, the Supervisor of Assessments for Montgomery County. The State Department of Assessments is a state agency. Assisting her will be Bryan Levenson of the agency. We will try to let them present first, and after the presentations, we'll be open for questions. Please raise your hand on Zoom to ask a question. Without any further ado, it's yours, Ava.
Good evening, everyone. Thank you for having Bryan and I this evening. I am going to go through the first half or 2/4 of the presentation, and then I'll hand over to Bryan to present the other half or third of the presentation. Okay, so I'm gonna start sharing my screen again. Everyone can see that now?
Yes.
Okay. All right, so the real property assessment process. Dan Phillips is our director, and Adam Lewis is our, Adam Lewis is not on the slide, but I'll tell you, Adam Lewis is our state supervisor. And I will go on to slide number 2. Okay, real property offices. So there are 24 assessment offices in the state of Maryland, 23 county offices, and the city of Baltimore. And so our real property division is made up of our headquarters staff, as I mentioned, Dan Phillips, Adam Lewis, and some more area supervisors and other headquarters staff. The local offices are located in each county seat. We are, of course, here in Rockville in our county seat. Maryland has about 2.3 million property accounts, and each year a third of those properties are valued, so that every 3 years we assess a third of the county. The triennial assessments, as I mentioned, there are 3 assessment groups, and each year we assess a different third. For January 1, 2025, we assessed we're assessing Geo 80 or Group 1. And then for January 1st, 2026, we'll be assessing Group 2. And then January 1st, 2027, we'll be assessing Group 3. There are different approaches to valuation. There's the cost approach, the income approach, and the sales comparison approach. The income approach is mainly for income producing properties such as commercial properties. Oops, I think I went back and I should be going forward. Okay. Different types of properties. There are, for residential properties, there are single family properties, townhomes and condominium style properties. Commercial properties, there are offices, retail, warehouse, and apartments, to name some types of commercial properties. So assessing residential property. We start out with an estimate of the cost of construction. We have an estimate of the land value. We apply a market value indicator, which is now really called a neighborhood adjustment multiplier. And then we check that we've gotten everything correct by using statistical validation with sales, basically checking our assessments against the sales to make sure that they're in line with sales, because assessments are an indicator, show the market value, and sales are what we use in order to determine assessments. So physical attributes of properties that you will see on your property worksheet, if you've ever looked at your property worksheet, it'll tell you the number of stories, the size of your property, the type of construction, whether, whether it's brick or frame, the quality of construction, the type of heating, whether or not there's finished basement, how many square feet of finished basement, and other residential attributes such as accessory structures like decks and pools and any other improvements to the property are shown on the worksheet. So we use a modeling system to value properties. So we compare apples to apples, so to speak. So like we compare two-story properties to other two-story properties, ramblers to ramblers, that sort of thing. And we look at similar construction quality and similar style of construction. Like we compare townhouses to townhouses, colonials to colonials, that sort of thing. And then the neighborhood adjustment index, that was what I mentioned before when we talked about the market value indicator. It's what used to be known as the MVI, or market value indicator, is now the neighborhood adjustment index, which is an index that allows us to convert the cost of the depreciated replacement cost. We apply this market adjustment index, and it converts that to a market value, which we then add the land value, and you have your total assessment. Then the IAAO, or the International Association of Assessing Officers, is the organization where we get our standards from. So, it's not just, we don't make up the standards. We actually look to the International Association of Assessing Officers and use their standards, which are nationwide, or actually worldwide by the name international. Okay, so your assessment notice. Some things on your assessment notice will include the old assessment value and the new market value. Old market value, new market value. The value of both the land and the buildings are broken down. The taxable value is on there. The taxable value is the value that your tax rates are applied to. The homestead information is also on your notices now, beginning from last year. It will, the notices will tell you if your homestead tax credit application was approved or not. And the occupancy status, whether it's your principal residence, yes or no. Appeal deadlines are also on the notice. The appeal deadline is 45 days from the notice date, which is usually sometime in the first week or early in the second week of February, is usually 45 days from the notice date, because the notices are always mailed towards the end of December. And hearing options are also shown on your hearing notice. You can let us know whether you want to have a hearing in person with an assessor, or a telephone hearing, or a video hearing, or a written hearing where you don't come in or don't really speak to the assessor. You just kind of write what your overall reason for appealing is, and the assessor will review it, and then you'll receive a final notice of assessment in the mail. So increases in assessments are phased in over 3 years. So in the example that you see here, the property increased $30,000 over a 3-year period. And in the first year, a third of that $30,000 is added to the previous assessment. And then in the second year, 2/3 is added to the previous assessment. And then the last year, the property is at the full cash value, at the full cash value in the third year. Okay. The homestead tax credit. So The homestead tax credit, what it does is it limits the increase in your taxable value of your principal residence to no more than 10% above what you paid taxes on in the previous year. It does not transfer. The new owner will have to apply for the assessment for the homestead tax credit. You must own and reside in the dwelling for 1 year, including July 1. Applications must be received by May 1st in order to be eligible for the credit for July 1st. And there's the website where you can apply online, onestop.md.gov. And you can always call our office and speak to someone if you have additional questions on the homestead tax credit. Oops, did I skip one? No, I didn't. Okay. These are the different homestead tax credit caps. As I mentioned, Montgomery County is 10%. And the 10% means as long as you own or occupy the property and it is your principal residence and you have applied for the homestead tax credit, you will not be responsible for paying taxes on increases in your assessment greater than 10% above what you paid taxes on the previous year. Now, there's no limit in your actual full cash value, but there is a limit in the taxable assessment, and that is the 10% cap that you see here. Okay. Another tax credit program that the state has is called the homeowner's tax credit. The property you must own the property, and it must be your you must have a legal interest in the property. Owner have a legal interest in the property. The dwelling must be your principal residence, your net worth, not including the home's value, and some retirement accounts must be less than $200,000. And your combined gross household income before deductions cannot exceed $60,000. And again, the website to apply for the homeowner's tax credit is here at the bottom, the onestop.md.gov. And there's more information on our website at dat.maryland.gov. Okay. The state also has different types of property exemptions. There's a blind exemption for persons that are legally blind. That exemption is a $15,000 credit towards taken off of the assessment value on the tax bill. There are exemptions for 100% disabled veterans that are 100% service-connected disabled, permanently and totally disabled, and as the VA would, rating would let us know. And that exemption is applied to the primary residence, to the land and the building. Okay. Disabled active duty members can also receive the exemption, but I believe they must reapply every year if they're active duty. The surviving spouse of a 100% disabled veteran can continue the exemption after the veteran passes away, but the veteran must have been a Maryland resident at the time of his or her death. And then the surviving spouse of a military casualty. The individual or the surviving spouse must have had their primary residence in Maryland at the time of their death. The assessment worksheet. I kind of talked about the worksheet before, but this is kind of what it looks like there. It has the first section has describes the type of house, the enclosed area, and it gives you the cost breakdown. In that section, the next section has some adjustments there. There are the words are kind of covering the section that's kind of covered there are all the accessory structures like decks and porches and that sort of thing. And you can see the depreciation, it gives you the building value. And then below that is the land value, and then the total value is somewhere there at the bottom. Okay. So we do assess every year a third of the county, but there are valuations that are also out of cycle, meaning they're not in cycle, meaning they're not due to be reassessed at the time. So substantially completed new construction that adds at least $100,000 that is assessed every quarter when the construction is substantially completed. Zoning classifications that are changed at the owner's request, can also be assessed out of cycle. A change in use or character can be assessed out of cycle. An example of that would be a property changing its use from, say, a residential use to a commercial use. An erroneous calculation or measurement can be corrected out of cycle. And properties that are rezoned pursuant to Tax Property Article Section 8-226 can be assessed out of cycle. And subdivision changes, subdivision plats or condominium plats are also assessed out of cycle. Okay, now we're at the point where we can switch to Bryan.
It might be easier if I share the slideshow on my own screen.
I'll stop sharing then?
Yeah.
Yes.
If you would, please, Ava.
Okay.
All right. Alan, if you could host this disabled participant screen sharing.
You should be able to share.
It says host disabled participant screen sharing.
Okay, try that.
Okay, there we go. All right. So here's where we are, right? We're on the appealing and assessment. Let me start this slideshow from the current slide. Here we go. So there are several times when an assessment can be appealed. You can appeal it on reassessment. So when you get that notice, I checked, and they're scheduled to be mailed December 30th, I believe it is. And you'll have 45 days from the date of that notice to file the appeal. You can also do what's called a petition for review. So in the interim years of your 3-year cycle, if the market goes down or you feel that your property is overvalued based on whatever factors, you may file this. It's called a petition for review, and it's due. The deadline, the law says the first working day after January 1st of that year for that year. But I like to tell people get it in by December 31st, so that way you're covered, because that's a floating target, that first working day after January 1st. And then appeal upon purchase. If the property is purchased between January 1 and June 30, it's 60 days to file the appeal. And that's, the form for the petition or the purchase appeal is on our website. Same kind of characteristics that you would have for your, other appeals. Same 4 ways to do it: written, in person, on a video conference, or on the telephone. So on reassessment, if you're appealing on reassessment, you appeal the value that's shown on the assessment notice. And then you can either do it online, or you can fill out the form that's going to come in that envelope. And it's 45 days is the deadline. It'll tell you right on the notice what that deadline is. It's usually the middle of February. But again, that depends on the calendar and when things are mailed out and those kinds of things. And I should point out it's postmarked by that date. So if it's a February 15th, February 12th deadline, and you take it to the post office on February 12th, and we don't get it till the 14th or 15th, as long as it's postmarked by that deadline, we will accept it. So that's key. There is that postmark. And then when you're doing when you are submitting that form, you want to indicate which way you want to have the hearing. If you want to have the appeal in writing, you want to send us everything you want us to consider with the form, sales, whatever it might be. If you're going to do one of the other options, I would just say get us the form, and then we'll schedule you for a date and time to come in, call in, or log in. And at that point, when you have your meeting with the assessor, you can either hand them your evidence or your documentation, or you can email it to them during or just after that hearing. So unless you're doing it in writing, you don't need to worry about getting all of your documentation together to submit with the appeal form. But if you're doing it in writing, then you'll want us to have everything that you want us to consider at the time that you submit the appeal. So again, we talked about petition for review real quick. Used to file property that's outside of those 3 years. As I said, the first working day following January 1st. It can only be filed in years when the property is not reassessed. Those notices of assessment will always supersede those out of cycle appeals. So if you're not sure what year it is, if you're not sure if you're reassessed or not, if you file that out of cycle appeal, but you're due to get a reassessment notice, those appeal rights supersede the out of cycle appeal rights. And again, you can request it or get it from our website. And then, as I said, when events have occurred that may cause the property value to decline. And we talked about this, transferred after January 1, but before July 1, 60 days. Again, the same form can be requested or downloaded. And when the sale price indicates that the value has declined. And then, so the first level is you meet with a member of our assessment staff. It's going to be an assessor. They should have some familiarity with your area, but it may or may not be the specific assessor who was assigned to your area based on the number of appeals that we have, and we schedule them, and there might be 2 or 3 at the same time from the same area, and one assessor can't handle those, so you'll be meeting with another assessor, but they should have some familiarity with your area. So you come in, you call in, you meet with us on video, or you do the written appeal. You give us everything that you want us to consider. We send you what's called a final notice of assessment. If you're not satisfied with that, you have 30 days to file for the next level. So the next level, the second level, is the Property Tax Assessment Appeals Board. They're a 3-member panel. They're Montgomery County homeowners. They are appointed by the governor, but they're an independent agency. You go in, you make your presentation. We have somebody, they make a presentation. Easiest way to describe the board's function is that it's similar to an arbitration panel. Now, not exactly the same, but that's the best and closest example that I can give you. They'll make a decision. They'll either keep it the same, give you what you want. Maybe they'll reduce it, maybe not to what you want, but they might take something off. Whatever the outcome of the case is, they're going to send you an order notifying you of what that value is. Either it's the same or it's different. And then if you're not satisfied with that, you have 30 days to file with the Maryland Tax Court. Most formal of the 3 levels. It's with an administrative judge. There's rules of evidence, there's questioning, there's objections, things like that. But for the most part, these cases take place in one of our conference rooms. It's not like you're really in a courtroom. I mean, they can be in a courtroom. And over the years, I've had several cases in courtroom in Baltimore. But for the most part, you're going to be in a conference room in our office. And it's you, anybody that you want to bring with you, the assessor, and the judge. And you then have to make your case to the judge with the evidentiary standard of clear and convincing evidence. So you clearly convince the judge, whether it's sales, whether it's estimates of cost to cure, of deficiencies, whatever it might be, that proves that proves your case that your assessment is incorrect. Now, I should point out that the burden of proof is on the petitioner, whoever files the case. So you have to prove that our assessment is correct. We do not have to. You have to prove that it's incorrect. We do not have to prove that it is correct. So the burden is on you to provide that clear and convincing evidence to the judge to say my value should be lowered for whatever reason. You'll get it once the judge makes their decision and they reduce it to writing. You'll get a copy of the order. And then if you're not satisfied with that, you can file for circuit court. But circuit court's going to do what's called judicial review. They're going to review the transcript. They're going to review the evidence. They're looking for, was a law violated in any way? Did the judge do something they weren't supposed to do or accept something that they shouldn't have accepted? If that point of law affects the value, they'll send it back to the court saying, to the tax court saying, hey, take another look at this with this in mind. But they're not going to. Their job is not to deal with the valuation. Their job is to deal with what were the proper steps followed by the tax court in order to arrive at that valuation. So it's not really another stab at it, another bite at the apple. It's, hey, I think I still deserve some relief, and the circuit court says, well, all the T's were crossed, all the I's were dotted, and nothing untoward was done. So that's that. We have had cases on legal standing, on legal reasons that have gone higher to the state Supreme Court and that sort of thing. But those are very, very rare. So again, we talked about the 4 options. We will schedule you. We have so many of them that come in the first time. We just schedule you for a date and time, and you have the opportunity to postpone it. So if you get that notice of hearing and you say, I can't make that, you can then call our office and say, hey, Mondays and Wednesdays after 2:00 works for me. And then we say, here's what we've got. But we can't be scheduling everybody. We can't be reaching out to everybody saying, hey, when works for you? So we just have to go ahead and schedule those. If you're doing the written, you're not going to get a notice of hearing because there's not going to be any hearing to notify you of. It's just the packet's going to be put together. It's going to go to an assessor. They're going to review it, and they're going to make their decision based on what you've presented, based on what the market is showing. We will mail you a copy of your worksheet, and we will mail you what's called an area sales listing. Now, to be clear, it's an area sales listing. So it's a listing of all the sales, all the arm's length sales in your particular subdivision. That could be townhouses, that could be split levels, split foyers, ranchers, colonials, everything. Not necessarily the specific comps that we use to value your property, but a list of all of the sales in your neighborhood. And then you can glean from that and say, well, I think these two are most comparable. And then you can provide those to us. You can buy the worksheets for those at a cost of $1 a piece from our office. And then, or you can, look online in our real property data search, but it's not going to give you as in-depth information as on that worksheet. But then you come back to us and say, look, you sent me this list of 14 sales. I think these two are the most comparable, and here's why. And I think that they suggest that my value should be lowered or whatever it is. And then you can also use Zillow. You can use Redfin to find sales. I mean, we don't necessarily put stock in those values that Zillow comes up with, but if that's how you can determine the sales in your neighborhood that you think are comparable, that is a source that you can use. You can contact a realtor. There are companies that specialize in representing people at these hearings. They do all the work for you. You just pay them the fee, whatever their fee is, and then they go ahead and do all the work for you, and they appear on your behalf and all of that sort of stuff. So there are several ways to get this done. As we said, it's the first level is informal. we're just going to have a conversation. You and I are just going to sit down, whether it's on the telephone, whether it's in my cubicle, whether it's a video conference like this, and we're just going to have a chat. Okay, so what's going on? Why do you think your property is overvalued? And we'll talk about that. And you should provide us with information that affects the value of the property. Provide details, verify everything. If you have questions about the worksheet, or you think that there's something inaccurate on the worksheet, you need to, it's a good time to talk to us about it. And regardless of what level or what type of appeal you have, assessment comparison is not a relevant factor. It does not matter what somebody else is assessed as. Sales are what matters. Arm's length sales. So if you come in and we're having our conversation, you say, you know what? My next door neighbor is assessed less than I am. I'm going to say to you, well, are they smaller than yours? Are they a different type of home than yours? On a smaller lot? Maybe they appealed last year and got a reduction. Maybe they have some sort of easement that you don't have. There are different reasons why maybe they're of lesser quality of construction. So there are many reasons why two homes, even if they're right next to each other, might not have the same valuation. And we're charged with a market value, and that is determined by sales, not by assessments. There's actually tax court case law that does refer to that says that that says that you can't compare the assessments. So as we say here, focus on the points that affect the value, indicate why our value doesn't reflect the actual market, inaccuracies. Pictures are nice. Estimates, if you have any estimates of cost to cure, of any deficiencies. But again, shy away from those assessments. And then when you're talking sales, no short sales, no foreclosures, no bank sales, no estate sales, no auction sales, no online sales, no family sales, divorce sales. They got to be regular, what we call arm's length, above board sales. That should be relatively similar to your property to help determine whether that market value is incorrect or not. I know there's a couple things in the chat. I'll get to them in a few moments. So again, avoid comparing past values. Mine was $200,000 3 years ago. It's $500,000 now. Well, the market at that time indicated 200. The market at this time indicates 500. A percentage of increase. My neighbor's assessment went up 10%. Mine went up 40%. Or the statistics that have been out say that the average assessment is up 20%. Mine went up 50%. Well, averages include highs and lows, and maybe the market for your particular type of home said it was up 50%, but when you average things out, it comes out to a countywide or a statewide average of 21%, or whatever that might be. So what that percentage is isn't necessarily relevant. It's what are those sales showing? Because if the sales are showing a 50% increase, we're not going to then, put a $10,000 increase just because we're going to put a 50% increase because that's what the market is showing. So, and then we don't want to talk about the amount of the tax bill. We do not tax you. Montgomery County taxes you based on our values. So discussing the tax bill with me, I can't change your tax bill. If I lower your value, your taxes may be lowered, but if you have the homestead, it would have to go below that homestead number in order for you to see any significant savings on your taxes. So keep that in mind. And taxes roughly 1% of value. So that kind of gives you an idea there. And services rendered or not rendered is not something that we are able to discuss. I don't get trash pickup. I don't have this. I don't have that. That's not something that we value anyway. So stick to the sales and stick to any conditional issues of your home. As I said, you'll get the final notice. This will show if the value was changed, and then 30 days to take that to the appeal board if you wish to do so. And and then of course this cuts, as I said, we have after the appeal board, there's 30 days to go to the tax court, to the tax court level. I'm going to go ahead and stop sharing my screen. If I can figure this out, and then we can, let's see, how do I stop sharing? There we go. Okay. So let me address it. Let's take a look at these comments here. Francie DePester, how do you request your property specific worksheet? Well, if you appeal, it will be sent to you automatically. You put in the appeal, we're going to turn around and send you that. If you don't plan to appeal, you can always call our office or email our office or come into our office and say, hey, I'd like my worksheet, and you can get that. So, and then we have something here about the, and this will be for you, Ava, regarding the 100% disabled veteran credit. Is it common for veterans who apply for disability to initially be assigned 100% disability rating? The rating is then adjusted downward after the VA board assigns a rating based on the actual claim. How does SSTAT ensure that a veteran reports his adjusted rating to SSTAT? And then there's other questions here. Did you want to take them one at a time, Ava? So I can't answer disabled.
Well,
it's in the chat. So
yeah, that's a pretty specific thing. Once a veteran is rated permanently and totally disabled by the VA, there is no reapplication process, so they do not necessarily need to reapply for the exemption. They would have to let us know if something changed on appeal or something like that. They would be responsible for letting us know. There is no mechanism right now for 100% permanently and total disabled veterans to have to reapply or anything or anything like that. The active duty members are the ones that have to reapply every year, but it would be the veterans that have to let us know. And we have had veterans who have had changes in their circumstances that did let us know that something changed, but it's completely self-reporting at this time.
Okay. I'm going to address two more quick things here in the comments. Tom Keene talks about Montgomery County is planning to change the zoning to anything people want. How do we justify doing this now while a change is coming? We are mandated by state law to value property once every 3 years. So we don't know whether the county's changing zonings. We don't say, well, a zoning's changing, so we have to wait till it changes to assess. No, state statute says we must assess 1/3 of the state every year. So regardless of what is coming down the pike, if that zoning change affects your value or you think it's going to dramatically affect your value, you can always file the appeal.
Well, also the assessments follow the market. That's the important thing to remember.
Right. Yeah,
zoning
exactly.
change alone won't automatically cause any assessments to change. We follow the market value. So if we see changes in the value, in the market value in the years before the assessments are done, then those will be reflected in the value. But if we don't see any changes, then that's also reflected in the market value. So we don't set the market, we follow the market basically.
Exactly. And then Kent Henry asks, is there a timetable that the worksheet will be sent before the hearing? We try to get them out as quickly as we can after we get the appeals in. And what I will tell you also is that we generally start our hearings. It's going to be February, March, that time. So you might not be scheduled till March or April, and you're going to get your worksheet shortly after you file your appeal. So in that January timeframe, so you'll have plenty of time. Now, if you look over it, you want to purchase some other ones, whatever, and you look at the worksheets and you say, okay, I see where they come from, you can always withdraw the appeal, but you'll have that worksheet out. We have that worksheet out as soon as we can after when we get the appeals in, and then there's usually a several week delay between you getting that and your hearing. And if you feel you need more time, you can always say, hey, I feel like I need more time. You can always use your postponement and get more time that way.
And also, we shoot to get the worksheets out at least 30 days before the hearing. That's what we strive to do. We usually do that.
So you shouldn't have any problems with that, because you get your notice a month ahead of time. That should be ample time. But if you feel you need some more time, you can always shoot us an email or call us and say, hey, I got my notice of hearing. Is there a way I can postpone this? We'll get you that one postponement, push it back to April, or wherever our next opening is. Lewis, when improvements such as additions are made to a home, how does SDAT know about the improvements, and how soon does SDAT adjust the assessment to reflect the change in value attributable to the improvement? So permits. So if a permit is taken out, or when a permit is taken out with the county, we get a copy of that permit. We have a group of assessors that just do new construction and those big additions and those kinds of things. We will, we're going to keep checking on it, and when it gets to what we call substantially complete, we can add it to the tax rolls on one of the 4 quarters of the tax year: July 1, October 1, January 1, or April 1. So if it's substantially complete March 15th, we can add it to the tax rolls for that April 1st quarter. We can put a phone number in the chat to request a worksheet. I'm doing that right now.
I'd like to offer a comment. If you intend to look at the comparable properties, you can go down to the Department of Assessments and Taxation at 30 West Goody Drive. There's plenty of parking there. But one thing I'll remind you, if you want to buy like 3 comparable properties, you have to bring a check for $3. They do not accept cash. So if you're going, just bring a check for whatever the number of properties are. They don't really make much money on this, but somehow they don't want to accept cash. I'll offer some other questions that I've received in advance once you finish the things in the chat room.
Okay, I'm just putting just putting a number in. If you want to go ahead with that, Jerry, we can.
I'd also like to comment that I would recommend almost anyone check their worksheet. Do you provide one for the homeowner for free, or do they have
Yes. So yours is free, and if you file the appeal, it comes automatically. Anybody else's, as you said, is $1 a piece.
Well, I strongly recommend, because we've discovered people who have listed on the Department of Assessments and Taxation worksheet that they have indoor porches that have been torn down, and depending on the age or the neighborhood, there have often been a lot of things that have been removed from the property based on the age of the property. So I'd almost recommend that anyone who is involved in this get your own worksheet, or neighbors of yours. If you're going down there, spend the $10 and get your neighbor's property worksheet so you can show them what's on theirs. If there are no more questions in the chat, I'll give you the other questions that I've received in
I
advance.
think, I'm not sure if we answered this one. Does the homestead tax credit need to be applied for year after year? And the answer is no. You apply for the homestead tax credit one time. The homeowner's tax credit, the one that's based on income, that's the one you do have to apply for every year.
Yeah, because incomes can change. You hit the lottery, you get a structured settlement, things like that. So they want to know your income every year. But the homestead, once you apply for it, it stays.
Now, of course, there's an exception to everything. If you applied for it and then you rent out the property, then you lose the homestead credit. When you return to the property and decide to own or occupy it again, then you would have to reapply. But there aren't too many instances like that, and that's one I can think of. Bryan, did you mention about the additions that the assessors review the properties every quarter?
Yeah,
you add them to the assessment rolls.
Yeah, I was
actually completed every quarter.
Right. So on one of the 4 quarters of the tax year, July 1, October 1, January 1, and April 1. So if it is substantially complete March 15th, we're going to add it for the April 1st quarter. And then that just, that gives you 1 quarter of the tax year that you pay the additional taxes on. And then for the next tax year, it's for the full, for everything. So just to tidy up what Lewis was asking about. How soon does it reflect? It's got to be substantially complete. If it takes a year, it takes a year. If it takes 6 months, it's going to be the next quarter after that 6-month time frame when it's substantially complete, and then it's on those 4 quarters. Hope that answers the question.
The next question I have, which I've received from other members of the Montgomery County Civic Federation, is they do not understand that you use a 190-year life of residential buildings. Minor improvements will often add 10 to 20 years onto the expected life of the building. They use a 1% depreciation method for the first 10 years of new buildings and a 0.5% for the next 180 years. They don't understand how that heating, ventilation, and air conditioning systems can have an expected life of 190 years. They've asked me, why is air conditioning considered an air down when almost, I'd say 99.9% of the new buildings have air conditioning installed?
Okay, I'm gonna take both those pieces. I'm gonna take it piece by piece. Okay, so the depreciation, don't think of it as 190 years. Okay, think of it as 1% per year for the first 10 years, then a 0.5% per year after that. A 100-year-old home at full depreciation is going to be 55%. Now, a 100-year-old home, I'm sure something has been done to that house. It's been painted. There's been some sort of renovation. There's been a new roof. There's been new windows. There's been new HVAC systems. And when those things occur, we can then tweak that downward to say that now the house is not 100 years. It's not 60 years old anymore, the whole thing. Part of it is brand new, so that amalgamates out to 45 years or 50 years or whatever that is. And then that we reset that depreciation, and then it goes a 0.5% per year every year after that. So we don't have any homes that are 190 years with no depreciation, with standard depreciation on them, because in the course of that time, something has to have happened to that home. I mean, I'm not aware of any home that's that old or that would be that old that hasn't had something done to it. You get into unlivability at that point in time. And then HVAC systems. So when you're looking at it from the cost approach, there's a cost for the HVAC contractors to run all the ducting, to run all the vents, to run all of that sort of stuff. Now, when you think about it, there are post-war modern homes that had window units. They didn't have central air conditioning. Should we be charging them as a minus and bumping everything up for everybody else? or we just do it as an add-on because those things, there was an additional cost to install any of those HVAC components. And so we do a cost and a market. So the first thing we do is cost, then we convert to market with that neighborhood adjustment that Ava was discussing earlier. And one of those costs would be to install HVAC units, to install the ducting, the returns, the covers for the vents, all of those sorts of things. So since there's an additional cost to that in the building realm, we're going to reflect those costs in our assessment.
Another question that I've received in advance was people seem to question how low the land assessments are. And in last year's assessment, the land went up about 5%, while the buildings often went up by 50%. In many older neighborhoods, such as mine, where the houses are roughly 60 years old, we're seeing a large number of tear downs, which would sort of indicate that the building has no value and they're just basically buying the land for any tear down. Why is land so low valued for most of Montgomery County?
So, the law says we have to have a land and building component to every assessment. We look at land in several different ways. We do look at tear downs, but we can't use tear downs alone as our indicator of market value. I think if we did that, then your assessments would be way too high. Say, for example, that tear downs, say that we have a neighborhood that's like an $800,000 neighborhood. And for example, the tear downs are selling for $700,000. Then you have the depreciated replacement costs of that home, and you have to add that to your land value. And say the depreciated replacement cost of that home is, I don't know, $400,000. Your tear downs are $700,000. Now you have assessment for $1.1 million, but the sales are indicated $800,000. So we have several ways. We look at tear downs, we look at vacant land sales, and we look at what's called the land residual method. That's where we look at what properties are selling for, and we deduct from the sale prices the depreciated replacement costs, and we're left with a land residual. So that's the land residual is probably the most accurate method we use for determining land value. And we could never just use the tear down value. I mean, it would work for probably your new construction. If they're selling for 1.2 million, the tear downs were 700,000, then it probably would work to have like a 700,000 land value on new construction, but it wouldn't work for the older homes. So that's why we go with the land residual technique. Did you want to add anything, Bryan?
Yeah, I just wanted to say that, if the total market value is correct, that's what we're striving for. And if the land goes up 5% and the building goes up 65%, but that 70% increase is warranted by the market, then maybe that's correct. So if I'm going to speak about this from an appeal perspective real quick, just we're looking at total value. So if you come in and say my land should be lowered, well, your total value should be lowered. And we may or may not reduce your land portion of it unless there's some reason to do so. So, yes, there are two portions of the total, but we're looking at that total property value. And if you think your land is valued incorrectly, you can bring that up to us. But if the sales are showing that your total market value is correct, it's going to be hard for us to adjust that land value.
I think you could basically adjust the depreciation values to more reflect that these houses are fairly old, that you shouldn't be stopping at 55% of depreciation. And then you get the thing. When you do this with undervaluing land and overvaluing buildings, you wind up actually hurting the state of Maryland on taxes of rental property, because anyone can use the ratio that you've used on the land and building, which actually creates more depreciation for the people and actually reduces state revenue.
Well, Jerry, I never said we stopped at 55. I just said that a 100-year-old home with no depreciation, with no with standard depreciation, has 55%. Now, chances are something's been done to that 100-year home in the course of those 100 years that might reset it at 30 or 40 or whatever it might be. We can change the ratios. We can change it and say, okay, if you got a $1.2 million property, we can say the house is worth 400 and the land is worth 800. It's still 1.2. Or we can say the house is worth 800 and the land is worth 400. It's still 1.2. So, we're not necessarily going to adjust depreciations except when we see that, work has been done. If there's things that are above and beyond depreciation, like you got a chronically wet basement, you've got, flooding problems, you've got crack in your foundation. Those are not that's not depreciation. That's an obsolescence, and that's a different way of handling it. But those are on a case by case basis. So depreciations usually don't get adjusted, except if we're looking at the sales and we see that there's new sinks in there, there's new appliances, the flooring's been redone, those kinds of things to get it ready for sale. We might take 5% depreciation off of that because now it's not an original home anymore. Some of it is new. So, and we don't cap it at 55. We don't cap it at 100, but it's hard to get to those levels because unless you do nothing to your home for 50 years and it doesn't get condemned, then something is done to that home, whether it's replacing HVAC, whether it's replacing windows, roof, coat of paint, new appliances, updating the kitchen, whatever those things might be. And we reflect that with our depreciation adjustment. And so, in the course of 100 years, something's going to have to have been done. So there is something in the chat here. So let's, before you continue, Jerry, generally speaking, how many homeowners appeal their assessment each year? What is the percentage are successful in their appeals? And are comparable prices clear and convincing evidence of assessed value? So, Alan, first of all, sale prices are clear and convincing evidence. If you provide me with arm's length sales of similar homes to yours that have sold recently that suggest that your value is overstated, then yes, that can warrant a reduction. But they need to be arm's length, they need to be comparable, and they need to show that decline in value. Now, I would say, and Ava, you can chime in on this one too, but I would say how many homeowners appeal? That's hard to say because some years we have 1,000 appeals and some years we have 200 appeals. It just depends on the market. It depends on where our values are coming in and where people think, oh, well, values have to be going down and we have them up, or vice versa. And then what percentage are successful? We've just done the market analysis. We've just done the market work. Unless there was a sale that came in within the last 6 weeks from now, or, that kind of thing, that significantly upsets our valuation, we've just done a market analysis. We've just done this determination. So unless there's some sort of sale that occurred after the time that we had to stop our work, we feel it's pretty fair. I think it's fair to say that it's going to be, it might not be an easy thing to do to receive that reduction unless you have those conditional issues that we're not aware of, or there's that smoking gun sale that occurred within the last 6 or 8 weeks of the year that we're not able to have considered. But other than that, it's really hard to say because some get reduced for conditional issues, some get reduced for easements, some get reduced for there are different reasons, and then you've got your out-of-cycle appeals that may be reduced. There may be a higher percentage of those that get reduced than than the other ones. Ava, did you want to chime in on that?
I was looking to see if I had anything just on last year's appeals. Looks like we had close to around 4,800 appeals last year. Couldn't say how many were successful. I don't have that data. That's something that we could look up if we had to. If you're just looking for the number that that was reduced, we could find that information. We'd have to run some sort of query, and
Right.
we could let you know.
And then why does Montgomery County have a 10% limit on property tax increases? Other counties have are much less. So my understanding, and Ava, you can correct me if I'm wrong, but the counties can select what they want. One of the counties had 0. So they have a 0% cap on their homestead. Most of them are 4 or 5 or 2. Montgomery County has said 10%. So
it's not up to the state of Maryland. Since we're a state agency, the counties set their own caps, and Montgomery County has consistently selected 10% for as long as I've been here. Montgomery County has selected 10%.
So if you think that it should be lowered, it should be 5% or 4%. You need to talk to your county council person and get them to change that. But the state cap is going to be 10% no matter what. So the state tax will be capped at 10%. The county taxes are capped at whatever that other level is. So if it's 4%, it's 4% on county taxes and 10% on. I think it's easier to have them both be the same at 10%, because then it's not like, well, this one's capped at 4%, this one's capped at 10%. They're both capped at the same percentage.
I have another question. That was
Sure, Jerry.
do you have any rough estimate of the increases that will be for land and buildings in this cycle of the properties that are going to be reassessed on January 1st, 2025?
Would you repeat that
I
for me, Jerry?
understood he's asking about, do we know what the overall increase is going to be for the 25 RE group?
Do we have that data yet?
I think we do. Off the top of my head, I'm thinking it's.
Well, we'll give you a few seconds to find out. I mean, and it's just a rough estimate. We know that not all properties will be equal, but this was a question I received from a number of people who are going to be reassessed in this coming year. And I think by December 16th, today, you have somewhat of a final idea of how many properties. I think you can tell us exactly how many properties are going to be reassessed this year. But the people were wondering if they have any idea what the percentage increase in land and the percentage increase in buildings will be. And I know you call them improvements, but we call them buildings.
So while Ava's looking for that, Neil put something in the comments. Someone with decades of experience in the state assessor's office told me that assessments are done by software. The software written originally for Florida and Louisiana is unable to correctly determine valuations of old homes in neighborhoods like mine where tear downs are the rule. So we use a computer-assisted mass appraisal program simply because we have to. We have 2.4, 2.5 million properties in the state of Maryland or more, and less than 500 assessors. There's no way physically possible, that we could do that without using a computer-assisted mass appraisal program. It requires depreciation. It requires modeling concepts. It requires some things. Now, whether those values, whether you agree with the value or not, the system is the system, and it spits out a value based on the parameters that we put in based on the structure of your home, the characteristics of your home.
The system is tailored for Maryland, basically. I can't really confirm whether or not it was created for Florida or Louisiana, but Maryland is one of the only places that has a phase in for a triennial reassessment cycle, and this system was tailored for us. So, I mean, it definitely works for our purposes. Like I mentioned before, we follow the market. We don't set the market. If you, as Bryan says, if you find your comparables that are most like your property, similar vintage, similar style, similar construction, and you can show us that we are incorrect, then we have no problem adjusting the value. But we definitely follow the market. So our computer-assisted mass appraisal system doesn't just spit out random numbers that have no basis in reality. It's based on the sales.
Right. But it helps us do the work as opposed to doing it all by hand and all of that sort of stuff. So, did you find that stuff?
So I don't have a breakdown of land and building increases. I can only tell you that it looks like there's going to be an 18% increase across the board for residential and commercial, just total increase across the board and assessment values this year.
Is that high?
Yes, that's it. That's the number, around 18%.
Another question, do you have the date when you're going to actually send these out, which would affect the number of days for the people to appeal?
Yes, so we know that the notices will be mailed on December 30th this year.
And it's 45
days. 45 days to appeal.
Right, and it's not 45 days from the date you receive it. It's 45 days from the date of that notice. So if you take
from December 30th
and count 45 days, it'll be right on that notice. It's generally the middle of February. I'd have to sit here with my calendar and count it for you. So we're talking 1, 2, 3.
Looks like Valentine's Day will be the day that you have to get your appeal in by.
Yeah, it looks like postmarked by February 13th. So yeah,
okay.
Around.
Yeah, so February 13th.
Don't wait till Valentine's Day.
Right,
It
right.
might be late then.
So even if you get your notice, January 3rd, you still have till February 13th to file that appeal. Whereas if somebody gets it on December 31st, they still have till February 13th. So it's 45 days from the date of the notice, regardless of when you receive it in the mail. And this time of the year, mail can be a little slow with the holidays and things like that. There are a lot of, David Koslitz, there are a lot of tear downs in my neighborhood, but my house is about 1957. The new builds are very large and much more expensive. Is my assessment unnecessarily high as a result? Not necessarily. Okay. It depends on your particular model of home, the quality of construction of your home, and what the sales are of similar types of homes to yours. We wouldn't necessarily use a brand new build to value your home. We would try to find sales of older homes that are like yours to determine your value. So it is your assessment unnecessarily high as a result because of the teardowns? The land value, you might disagree with the land value, but we're looking at that market. And if that market says a house built in 1957 is selling for $700,000, then you're going to be around that $700,000 mark, even if the new builds are selling for 1.4. It's just more about your home and the specifics of your home and how the comparables in the market relate to your home.
I'll give you one last question that I received. People are somewhat puzzled why, if they have a carport and a shed, you add value for those two to the buildings. Yet if you have a building that's been torn down and they put a garage in the building, they get a subtraction from the value of the building for the garage, which definitely would replace the shed and also replace the carport.
Okay, so garages, for the most part, there's one type of garage that's a minus. Everything else is a plus in the valuation. And again, it goes back to the cost approach. So if you have a carport and a shed, those things had to be built. They had to be framed. They had to be put together. The roofing had to be done on the carport. There's a cost to that. Garages, we're adding now you got a basement garage. Well, they're adding when they build that section, they're adding a garage in the basement. When you've got a detached garage with nothing, or a detached garage, it's a separate structure. There was a cost to that. When you have an attached garage, there's an additional cost to that. Now, if you have a built-in garage, we consider that 2 stories There's the 2-story roof height. So it's 2 stories, but we're going to subtract out for 1 story that's not living space. That's actually a garage that's less finished. It may have electric. It may have some sort of rudimentary drywall on it, but it's less finished than living space. So, but there is a cost to install that. You've already installed the 2-story section, but you're only finishing one section, one story of that as living space. So most of these things are driven by the cost approach, and that there was an additional cost to put that particular portion of the property on that property, whether it be a shed, whether it be a detached garage, whether it be some sort of attached garage, fireplaces, any of those kinds of things. There's on the cost approach, there's an additional cost to that. If people are concerned about that, if you appeal your assessment, you have your hearing, talk to one of our assessors. We can explain it to you specifically to your home. We can explain it a little bit more in depth for you. And so, those things add value because there was an additional cost to install them. You good, Jerry?
Yeah. Are there any other questions that anyone has? Otherwise, we will adjourn the session about 5 minutes early. Last call for any questions. Hearing none, I'd like to thank Ava Garvey for what she's presented, and I want to thank Bryan Levenson for an interesting thing. Is there any place that will this slideshow be available that we can put it online?
What do you think about that, Ava?
I think last year we were able to email it to you. I can do that.
I think we can email it to you guys, and
Then
you
we'll
can put it on your website.
Yeah.
That'd be great.
And I'd like to thank you all for having Bryan and I would like to thank Adam Lewis, our state supervisor, and Dan Phillips, our director, for allowing Bryan and I to be here with you tonight.
Thank you so much.
You're welcome.
Happy
Thank you,
holidays.
guys.
Happy holidays to you all
Thank
too.
you.
And Happy New Year. Take care. Good night, everyone.
Thank you very much for attending.
Good night.
Welcome.
I hope everyone enjoyed the session.
Thank you.